So I'm going to do a video on how to get funded in 2022. It's something that a lot of people that join my community and in trading in general, they're always focused on, how can we get funded? How long does it take? How do I do it? Is it actually possible? So in this video, I'm going to go through the correct way of doing it, the longer way, but the correct way, and how you're going to do this long term rather than passing the challenge and then losing it a month later. So we're going to get straight into it. Now, if you find value in this video, make sure to like and subscribe so I can, do lots more videos like this and provide value. So getting straight into it, we're going to get into step one, and that's going to be trading, so community. And this isn't necessary, but it's definitely something I would recommend, is to join a community. So the reason why is because trading is a very lonely sort of path, and it's just you and the charts, really. And especially if you've got people against what you're doing, then it's really hard for you to actually be motivated to do it. So this is why I recommend joining a trading community that complements your own style of trading, having people around you, like-minded traders who are there daily to help you level up. And I think you'll do this 10 times faster, being around the same people doing the same thing. So people on the exact same path with the same vision, rather than sharing your journey with people around you that may be telling you to give up, saying it's not possible. Surround yourself with people who inspire and motivate you. And that's what I would say. So join a community, a good community. It could be ours, it could be another one, and learn from someone who's doing it and people on the same path as you. So step two is strategy, education, and then finding your edge. So obviously, if you're going to go into something, you need a plan of action. So you need a strategy, you need rules. Like anything, if you're going to approach something, you need to know how to execute. So finding a trading strategy that resonates with your preference, personality, and style. So what that means is you need to find something that you actually like. It can't be a strategy where you don't like the way of trading, because you're not going to stick to it. So this is really key to getting funded and just successful trading in general. You don't need to go in blind, because it really won't work, and you may get a couple lucky trades, but it's not proper trading. You need something with longevity. So this is how you're going to find your edge. So learn from a mentor and refine or tweak things from the mentor that will fit with you and your preference. So once we have our trading strategy and the correct education, we want to start testing this and gain, our trading edge eventually. So step three, this comes into, building our edge, getting our strategy rules, trading checklists, and then eventually back testing it. So we need to now see our strategy perform in the markets from previous data and gradually work out what our edge is with the strategy. So this is where we can back test, and then something I created myself, which is called day testing. So day testing is literally what it says. We test each day of price action at the end of each trading day. So I've done this for ages now, and it really leveled up my own trading to a different level. It's just crazy. So what I do is through spread hours. So for me, it's 10 p.m. to 11, but really I'm not trading in the evenings, so it can be any time in the evening, but 9 to 11 p.m. UK time. The idea is that we go through our pair, or pairs. For me, I do EU from that day's price action. So what happened in that trading session? So for me, I trade London and New York session. So I go through that price action for that day, and so I'll put, if we trade London session, we would go through that price action during that session, use the bar replay tool and treat it like the live markets as best as you can. So some of the things I asked myself: did I take trades that day? Did they meet with my plan? Why did I take them? Were they correctly managed in terms of trade management? Did I make any mistakes? So this is really your chance to really digest every single candle, every move, and the why behind if you lost a trade, why did it lose? the why behind something happening. If you missed a trade that met with your plan, ask yourself why you missed that. So ASR it, write it down, and I do this every single day for EU, and it's just a game changer, because you're really, rather than back testing, you have them emotions still there from the day just gone, so you can really, look at that and remember how you was feeling, why you might have missed something, etc. So trading, so having a clear and precise sort of trading checklist, rules to tick off before we pull the trigger is so important. So we don't want to be guessing. So if we're guessing, it's no different to gambling, and we're not gamblers, we're traders. So we want to be able to execute with confidence and visually see our edge show in its hand, so we actually have a reason to enter, so that the market's given us permission to enter. If you don't understand what a super high quality setup is at first, then you don't need to be too worried, because you'll get that. This will come with time. With the more back testing or day testing you do, you will understand what an average setup is and what a high quality setup is. And if you aim for an 80-20 sort of ratio on high quality to average, that's fine. But if you just have 100% sort of 100% target on hitting high quality trades, that's fine as well. Could be 50-50, you need to work that out, and it comes with time. So leading on to step 4, this is where we get into risk management, trade management, and then the cut-off period. So firstly, risk management. So I can't express enough the importance of risk management. Without it, you can't succeed in trading. You can short term, but long term you won't last at all. So if we had 100k in our trading account, what's 1%? So 1% of 100k is 1,000. So if we lose our first trade and we risk 1%, we're down £1,000. So our account would be 99,000, which is 1%. So imagine our risk management was 10% risk per trade. We would now be down 90k, which is 10%, and that's one trade. What if we had 3 losses in a row? We're down 10% on each, which is 30%. So that's 30,000. We're down to 70,000 capital. Do you really think we are now in a good position to get back on track? Our psychology and emotions will be all over the place, will be a mess. So if, however, we stuck to our 1% risk management model, then we would be down 3%, which is nothing when we, especially how we trade, when we have high risk to reward ratios. 3% is nothing, and one trade, which we could easily hit a 10% trade in one position, we're back on track and we're in profit, and that's all it takes. So with correct risk management, then we can stay in the game long enough to succeed. And if we get on to exiting trades, so trade management, okay, so it's all good knowing when to enter or how to enter, but if you don't know how to exit, then for me, in my opinion, you shouldn't be taking the trade, because that's just as important as knowing how to enter. So what's your trade management plan? So are you setting take profits? Are you taking partials, leaving the rest to hit targets, trailing stop loss with price structure? So you need to understand this, put it into your trading plan, so you know exactly how to execute when you get to funding, or if you go for a challenge, say FTMO, you just know what to do because it's there, written in black and white. So getting into cut-off period, this is, so when do you call it a day and stop trading? This is what you need to know. So what is your maximum losses you're willing to take in one day? For me, it's 2%, so that's 2 trades. If I hit 2% loss, that's it. I ASR it later. So ASR means advanced self-review. I will do that later, learn from it, and that's it. Come back the next day. So you need to know this before funding, so you don't need to think about it when it happens. It's just there, so you just follow it. And then you won't end up just taking trades after trades and trying to get back your losses and make it worse. Okay. Step 5, building your own trading plan which is tailored to you. So this is where we need a plan before we even consider funding or trading in general. We need to have a plan so we can refer back to it. So this is so important. Without a plan, you have no reference to look at or to refine, tweak. You don't have a chance of making profits because you have nothing to refer to and to improve. So if you need help building a trading plan, use these following steps as your template. So step 1, into building trading plan, you need a strategy. So that's what we've covered above. You need rules, write it all down. You can always refine it later, but you need something to write down as your strategy, your rules, how you're going to enter. So some of the things you could be asking, what builds a great opportunity into a trade? So an example, so we could have a 1 hour supply zone. Do we refine it on a 15 or a 5 minute? How are we going to be entering? What time frames? Price delivery? Okay, so prices come into our supply zone. What time frames are we using to enter? 1 minute, okay. Inducement, liquidity. What's our entry model? These are all things you need to write down for your trading plan. Step 2, what are the market conditions? So trend trading, counter trend, ranges, trading tops and bottoms. Okay. Step 3, risk management, as we discussed above, so I won't go back into that. So we get straight on step 4, entry types. What are the entry types and your entry model, your confirmations, your go-to sort of entries. Step 5, trade management, as we just went through above. And then step 6, your checklist. So does this trade meet my plan? Would I take this trade on a 1 mil trading account? Did I forecast this? Am I emotionally ready, stable? Other things, is my risk correct? You need to double check these things. And should I be taking this trade? Step 7, your currency pairs. So how many pairs are you going to be trading? 1 pair and master that, just that 1 pair, or 3 pairs, 5 pairs, 10 pairs? Obviously that depends on the strategy you're trading, because some strategies won't allow you to just trade 1 pair. With how we trade, we can, because we have a lot of opportunity every single day. But that's why you need to tailor it to yourself and how you trade. Okay, so step 6, getting into actually trading, and then demo, but then live trading as soon as possible, and then psychology. So psychology and your mindset, this is the main reason people fail funding challenges and just trade in general. So how do you get better with your emotions? For me, it's just something you can't learn it overnight, or you can't read a book and then you've got it, you're just mentally strong. It doesn't work like that. So you need something that needs action and consistent repetition. So good habits, positive thinking, months of live trading and experience, and just time. Yeah. So you need time, months and months and months of putting your emotions to work, and that's how you improve. So along with books, there's definitely books you can read. So Trading in the Zone, Chimp Paradox, Mind Management, one of my favorites. Definitely books to read, and there's loads which will help you think better and build your psychology. So once you've covered all the steps above, you want to get into trading. So this is when we actually need to trade. So as soon as possible, really. So you need to put it to work and build up the emotions. Now, I'm not the biggest believer on demo trading, as it's not building emotion, because it's fake money. It's not building anything. But if you need to do it, I recommend doing it for a month, maybe 2 months maximum. But that's, you don't want to be on demo for a year, because that's not doing anything for you. That's just helping you to understand how to place a trade, and that you'll learn that in a week or a day. So if you can, put some money into a live trading account. It could be £500, £200, something you're willing to lose but at the same time it needs to test you. It needs to test your emotion. So if you're risking 20p, that's not going to build anything. It needs to be something, of course, with correct risk management, as we've discussed in this video, but it needs to be something that gets your emotions going and fired up. Okay, this is how we improve, and this is how we're going to build that emotion and psychology. Okay, that's going to get you ready for funding challenges and your own capital, if that's something you want to do. Okay, step 7 we can look at. So this is going to be right. This is when people aren't going to be happy with how long it takes. But this video is showing you how to do it correctly. You don't want to just rush this, because it's something that's worth keeping. So step 7, 6 to 12 months of seeing consistent results and gain that confidence. So 12 months is a long time for some people. Okay, I understand that. So 6 months is what I would say. So this is what people don't want to hear. So this is basically what's going to make you a part of the 5%, probably even less than that, because 95% of people who get a challenge or pass something, it will last a few months, and it won't last long at all. So this is what you got to do to be part of that 5%. So if you keep, right, this is an example. So if you keep stalling your car and you're doing, driving lessons, you aren't going to be confident, or you're not going to even consider going for your driving test, because you keep stalling it. So why is trading any different? It's not, it's the same. So if you aren't seeing consistent returns on a £500 account, then what makes you think you're going to do it on a 200k or 100k funding account? Okay, you're not going to do it, so you just won't. And so when you pass a challenge, anyone can fluke that and pass it. It takes one trade, and if your risk is high, it definitely takes just one trade. So that's a big reason why 95% of people will lose their account in a couple of months. So this is why. Right, so before you even consider going for funding, my advice is you want a minimum of 6 months of consistent results. Personally, I would even say 12 months, but 6 at a minimum. I understand that's a long time for some people, so 6 months. And if we get into this next text, you'll see. When I say 6 months of consistent results, it could be a 10% month, one break-even month, and even a negative month of -2, -3. As long as your bad months aren't horrendous over them 6 month period, then it's still consistent, and it's a long-term slow progression. So it's consistent profits, and that is what I would say is a 6 months of consistent results where you're seeing decent profit, and then you'll be in such a great position. You have confidence, you have data, because I recommend you to track this as well in Notion or a spreadsheet. So you've got all your data, all your trades, your 6 months of results, and then it will feel like your business, and you'll actually treat it like it's your business. Okay, then we can be in a really good position to keep our funding account for the whole year or forever, however long you want to be funded for. And that's just the correct way of doing it. So I've put at the bottom here, if you really want to keep your account, go through all of these steps I've gone through in this video. Write it down on notes, take notes on this, because this is the correct way of doing it. It's a long way, but it's the correct way. So it will take you longer, but ask yourself, do you want something quick that may work short term, or do you want something to work long term that's going to last long term? So obviously we want something to last long term, so that's what I'm getting at. So if you have any questions about something I may have missed or anything trading related, funding prop firms, let me know. The best way to reach me, or the only way, is Instagram. If you want to join our Discord community, we have people passing funding challenges most days. It's been quite a lot recently. So if you want to learn how we trade, how we do it, then the link is in the description. And you haven't got to join, but I recommend you do, because it's really good. The way we trade is, one of the best out there, and I'm sure you'll love it. So yeah, like, comment, subscribe. You can't comment because the comments turn off, but subscribe and like. Follow my Instagram, which you can see here. And yeah, I'll catch you in the next one.